So I've been away for the last 3 days, and wouldn't you know it, them 3 days away, everything goes kind of a little bit crazy. So we're going to do a little bit of catch up on what I've probably would have made a video on over like the period of like Tuesday, Wednesday, Thursday if I was here making videos, and squeeze it all into one video for you guys. So there's a lot to talk about. So we're going to get stuck onto what we missed out on. So first of all, the pre-market's looking pretty green. It looked pretty green yesterday, and then it gave a lot of it back during the day, which is quite interesting. Now, my first point is that we seem to be entering quite a bit of a volatile time in the markets. When we look at the Nasdaq at the moment, we've had a very good run in these last few weeks. Since that kind of June time, we've really seen a bit of a jump up in the market, you know, up 12%. So obviously, many of you guys have seen markets up 12%. I'm sure if you've had a lot of these stocks that have been massively beaten down, you know, 60, 70%, a lot of them have had a really hard bounce. You know, we talked about it so many times on the channel. When the stock market bounce, because we're so sold off at these low valuations, when we do bounce, you know, the markets go up 10%, you're going to see a lot of your individual growth stocks go up 30, 40, 50%, even potentially more. And when you look at the likes of, let's say, DraftKings, you know, that's close to 100% up, InMode close to 100% up, HIM's up close to 100%. Even stocks that are generally not performing that well financially, even they've had a sort of a bounce here, because even they deservedly probably should have been sold off because they're not financially performing, but too sold off and having a bit of a rebound. It's just that you've seen a lot of the stocks that are performing financially amazing, even they've been dragged down. It's the market's not kind of looked at the situation and gone, oh, actually they're still performing absolutely amazing, maybe we shouldn't sell them. Everything just got sold off. So that's why you've seen a bounce, and you've seen a bounce in even stocks that are doing okay, but the stocks that are doing absolutely amazing, you've probably seen more of an aggressive bounce with them stocks. And that's what we talked about for a while on the channel. You know, last few months we've been saying when we bounce hard, you know, it'll be like a slingshot and you'll miss it. And if you try time the market, you'll miss one of the best jumps which we've had. Now, saying that, when you do look at like the indexes, like the Nasdaq for example, that's currently down still 19%. So even though we have had a bit of a rally, there's still a fair way to go on the Nasdaq, for example, and that's going to lead a lot of stocks to still go up once we get to 52-week highs. And when you think about the growth stocks and everything like that, you know, another 20% jump in this, for example, in this index, imagine what they're going to do. You know, they're going to go up quite a lot. You know, and the thing is we enter a bit of an interesting time now. Same with the S&P 500, very similar, is that we are sold off because there was a lot of fears out there in the start of this year. You know, obviously the Ukraine-Russia situation, you had the likes of earnings decreasing, inflation, shipping costs, interest rates. There's a lot of pressure on. Now what we're seeing is a lot of stocks go to insanely low valuations, and we've had a bit of a bounce because everyone knew that these valuations were ridiculous. Like, even though there's a lot of negativity out there, the valuations we went to were insane for a lot of stocks, and that's why we've seen a bit of a rally. Now, I think when you look at the earnings decrease that a lot of stocks are getting affected by, and that deserves to have a drop in the stock market, I think for a lot of the big tech, are now starting to get to, you know, quite fair valuations. I think with some of the mid and small caps, you could still argue some of them could be a little bit higher than where they are. They were at crazy low valuations. So I think, you know, they could be a little bit higher. But when you look at the indexes, a lot of them have quite decent valuations again right now. And I think when you look at the drop off of earnings, we kind of got back to really a fair valuation, I would say. Give or take a little bit. And I think this is why it's kind of keen to watch this pre-market. And I think this was key yesterday, is that we saw the markets rather than give it all back, because it was a bit unsure, and it'd be very interesting to see where today goes as well. Is that I think we kind of entered a bit of a point now where we know we were ridiculous low valuations. We were talking about it, you know, on the channel. But now we've entered the point where when you look at the valuations, you look at the earnings drop off, it's an interesting time now. Is the market going to rally back to prices that we were at before this major drop off? I don't think so, because you look at the earnings drop off, do we justify it to be at 52-week highs? I don't know. I mean, the market's future thinking. We never know. We don't know where the markets decide where it's going to go, but maybe not at the moment. So it's an interesting time where the market seems to be in a bit of a phase where it's deciding where to go. And now while this market's in this kind of phase where to go, it's an interesting point as investors, because we're looking at this situation now and thinking, personally for me, you know, you guys know me, you've been watching the videos. During this dip, I was buying. And for me personally, I've got the rewards. You know, I bought, you know, stocks at crazy low valuations. You know, I'm getting DraftKings at $10, HIM's at $3. You know, insanely low valuations. And for me, I've got quite decent averages on them right now, and I'm quite happy to hold them. I might buy a few, but I don't need to buy that aggressively now we've bounced up. there'll be times where I start buying a little bit, but I'm probably not going to be as aggressive buying because I've already done it. So for me, it's entering a bit of an interesting point where I'm personally going to slow down when buying. I probably still buy a little bit, but nowhere near what I was doing previously. Where I see where the market goes right now, and that's the interesting point. So it's if you have been buying the dip, you've basically got the rewards now, but it's an interesting point to see where the market's going to go going forward. So I thought I'd point that first thing out. Next thing is the inflation. Wasn't able to make a video on the inflation data that came out, but it was good. It was good. The consensus was 8.7. We came at 8.5. I thought potentially we could see it a little bit higher. I thought we were going to come maybe around that 8.8% mark, but yeah, it was good. And the great thing as well is when you look here, really the big jump in inflation didn't really happen until like October time. October time is where we did see the inflation get a little bit out of hand and get in a crazy spiral. So actually, when we get past these tough comps and we start talking August, September, and then into October, this is actually when we have really easier comps on inflation. So when we get to this point here, we should see, in my opinion, the inflation worries actually start to ease a little bit right there, because that's when we get onto where it just jumps month after month after month. So yeah, that's one interesting point that I'm going to say, is that I was really impressed with this, because I think in a few months we won't be talking about this once we get to this hard comps. And obviously one of the key factors for this was oil prices. We know oil prices have been dipping. When we went into June, we knew oil was going to be quite high, and that's why inflation took us by surprise. But when you look through July or June and then into July, we could see the amount of oil, the price of oil coming down. So we knew that there was a good chance this inflation data, because one of the key things that had been causing inflation is energy. With this dropping down, we thought we had a good chance here, and that is what happened. So obviously this is one key thing to be looking at. Obviously when we look through July, it's obviously downtrended. August, it seems to have downtrended a little bit more, but it is starting to rise a little bit. So this is one key thing to kind of keep an eye on and see where this goes. So yeah, I thought I'd point that out. UK economy, I thought the UK economy data was quite interesting. It shrunk by 0.1%. I love this is typical UK media. Like, we love negativity. Negativity is what sells in the media, and this was a prime example. UK economy shrinks by 0.1% in second quarter as recession looms, and it's a very negative view on things. And then you actually look at the data here, and 0.1 was actually better than 0.2 that was expected. How about economy surprises that it's actually stronger than what is expected? We don't go for that headline. And also we're on the back of another quarter as that was actually surprising. That was better than what's expected. And actually going into Q3, we're actually expecting growth in Q3. So actually when you look at it, you go, okay, Q1 was better than what is expected, and grew. Q2 was did go negative. However, it was better than what is expected, and Q3 is actually going to show growth once again. So actually, when you look at the economy data for such a negative time right now, it's not really looking at. But here you go, the media's trying to sell it as negative. I thought that was really interesting. Disney stock on fire, up 5%. It was. Numbers came out unbelievably good. Disney overtook Netflix, which I did not see happening for another 2 years. It's already happened, which is insane. And yeah, Disney's on absolute fire. I thought that was really interesting. I'll probably talk about that on Patreon and when I do the earnings review and go into that a little bit more detail. But I thought that was a key standout point from earnings this week. And also going on to, and also it's one of those that everyone also, from Netflix, everyone was worried about Disney, like, oh, look at Netflix's numbers, and then, oh, Disney's going to struggle, and then boom, Disney's been absolutely on fire with their subscribers. One talks about stock on the Discord recently, especially this week. Revolution Beauty could be worth its own video. This stock has been making massive moves at the moment. So, I mean, if we look at 1 month, this stock is down 78% in 1 month, 78%. And if we just have a look from its IPO, you see the IPO here around July time, £1.70, now 16p. Insane drop off from an IPO. Quite often, obviously it's been a tough time for IPOs, and quite often we'll see IPOs that just struggle a little bit. But I mean, £1.70 down 16p. Oh my days, this is a massive drop off here. And especially these last 5 days, there's been a lot of, this month, but in the last 5 days, I mean, look at this, we were trading at 16p, boom, down 52%, and then boom, we've rallied all the way up. If you were buying this down at 8p, you've done very well for yourself. So there's a lot of stuff going on with this company right now. Originally, it came out with a trading update. The trading update I thought was actually okay. When you look at the trading update, it said that they are still growing going forward. which is pretty positive. They expect a little bit more loss in EBITDA, and they said that this was mainly due to short-term issues, notably in cost inflation, supply chain issues, and the war in Ukraine. So basically, they're still going to grow at something like 5-10%. If it wasn't for the Ukraine situation, the war in Ukraine, they actually lost. I think it says it's somewhere in here, but I can't spot it while talking to you right now. But that did take a 9 million impact on annualized revenue. So when you take that out, they were still going to grow 10-20%. But even with that impact taken out, they're still going to grow at decent rates, which I thought was pretty good. So that wasn't a major issue to me. The other thing was the impact on EBITDA. And they said that here it was inflation across operations, particularly in logistic and freight, and also indirect wage inflation. Now that's quite interesting because as a UK company that does a lot of sales into the US, how many companies have we heard this from at the moment? It's a common theme. Boohoo is a standout one. We heard exactly the same thing with Boohoo and their issues with cost of inflation, logistic and freight issues, and the delay and the expense that's increased on there. It's a common theme. And when you start looking at all these businesses and going, all these businesses are coming out with this common theme of freight, logistic issues, all of these businesses, it's not going to be a thing where all these businesses are going to struggle forever. Like, this is going to be an issue that's resolved. No, it's not a one company issue. And if you think all these businesses, like, look at Boohoo or you look at Revolution, and you've seen all these share price drops on this kind of fear of freight and logistic issues, do you generally think that these issues are going to go on forever? Do you think these are going to, generally impact these companies forever? Are all these companies on the verge of struggling or going bankrupt? I mean, it's just such a common theme. This is obviously going to be an issue that is going to resolve itself over a long period of time for me. And when you look at the impact of what it's had on a lot of these businesses here, you get in the opportunity in some of these stocks at really good valuations if these issues are resolved. Because you got something like here, like a Revolution here that has been impacted with sales because of the Ukraine situation. That's a one-off. They're still going to grow. You look at the inflation issues and logistic and freight issues. They're trying to get more vertically integrated. The increase in logistic and freight issues for me isn't going to be something that's going to be around forever. It will resolve itself. And once you look at that, you're thinking, okay, you're looking at a business that came onto an IPO at £1.70 and now it's down at 16p. Are you getting a really good golden opportunity here? And obviously there was another issue that was with the audit. The auditors are currently not signing off the numbers at the moment. They say at the moment Revolution is saying they're not being made aware of something that's affecting the numbers, and that's what's stopping them from signing them off, which is a positive. But as soon as you say that, investors get nervous and sell off. So I mean that's going to be very volatile, because depending if auditors sign it off with no issues, you should see this stock do quite well. Saying that, we saw S4 Capital, they had an auditor issue and eventually they signed it off. Sure, there was an issue, but then it was all cleared. It wasn't a big issue. It was like a 1 million or 2 million impact on the numbers, and that had no benefit on the stock price. So I mean, we'll see there. In my opinion, it would see the stock go up, but saying that, look at the issue with like S4 Capital, for example. If auditors did find some issues with the numbers, then obviously that has potential to send the stock down. So there's potentially still a lot of a few volatile days here for this business going forward. So it's an interesting one to watch, but I think it's one of those, I think this is one of those opportunities at the moment where you're staring at a business here on the UK scene that there's a lot of risk here. You've got the audited number issues, you've got the inflation issues at the moment, but really, when you look long term, can they resolve them inflation issues? Can they, resolve this, the costs and everything like that? And if the auditor issues resolved, which it could be resolved in, 2 weeks' time, if you get that resolved, then you're getting a business here at, a 47 million market cap. And when you look at the numbers here, they're still going to be growing at decent rates even after the Ukraine impact on the revenue. You look at the EBITDA, for example, they're still expecting EBITDA in the range of 18 to 20 million. I mean, we look at this business here, it's currently a 47 million market cap. So, it's like 2 times EBITDA, which is just, insanely low. And hopefully, if it sorts some logistics out, gets more vertically integrated with the shipping and more because it's more US based, you know, rather than relying on that shipping from the UK to US, and it's more vertically integrated and making its products in the, you know, US. That obviously sorts a lot of problems out rather than dragging it from the UK. I mean, it's an interesting opportunity at the moment, and there's a few of them on the UK side anyway, so thought I'd point that one out anyway. So those are a few things that I thought I'd mention anyway that have happened recently since the last few days since I've not been able to make a few videos. But yeah, hope you enjoyed it anyway. It's been a good few days away anyway with the stock market, so yeah, we'll keep an eye on how things are going anyway. So yeah, I'll see you tomorrow. I'll make a video on Saturday. I have no idea what I'm going to make it about yet, but I'll make a video on Saturday, and if you are on the Patreon, I will drop a live Q&A session tonight as well, so I'll notify you about half an hour or an hour before I do that anyway. So if you're on Patreon, keep an eye out for one more video. But yeah, hope you enjoyed it, and I'll catch you in a bit.